Steve texted me on the way over here that he couldn't make it, something came up. He's usually my cue, but I saw, can you share when the next door REIA meeting's going to be? So I want to share about.
It's the third Thursday of every month, so this month, whatever.
Figure it out. Hey guys, here's another meetup in the area.
The New Orleans Real Estate Investors Association, we're meeting at the Jefferson Orleans South in Metairie. If anybody's interested, we meet on the third Thursday of every month. So it's just another meeting.
Excellent.
Y'all are able to attend.
Excellent. So this Thursday night, they've got the West Bank Real Estate Investor Group. Steve, Aussie Steve, usually is my reminder to share about that. That one, a few months ago, we had Sterling Chapman here sharing about his journey with the Burr method. Are you guys here for that one? So he's going to be sharing. Actually, he's going to be interviewed more on that one. Just some other things like that. If you sign up for our monthly newsletter, I promise I only have time to send you one email a month about the meetups. On the bottom of it, it promotes like other meetups like this in our region. Baton Rouge, Mississippi, New Orleans, all that jazz. All right, let's get going. All right, so as I mentioned before, tonight it is going to be a little bit of a fire hose. But the reality here is this should not be your only training on the topic. It's just going to be an introduction, but I'm going to do what I can to get you guys going here. A little bit of my backstory is I started off, my first deal was flipping. Like my first two deals were flipping deals. Obviously I was getting in, I was buying low, renovating them, reselling them. I also then started doing some wholesaling on the side as well. But that's because I left my job in property management, so I needed today money. There's a few wholesale deals I very much can remember that I regret selling. Anyone can relate to any of that? Yeah? Yeah. I regretted selling them because they were such good deals but my biggest problem was the access to capital. All of my capital was tied up into the flips I was doing that was putting, food on the table, paying my bills, right? But I didn't know how to really use other people's money, but also to be able to take down these deals. And at that point, this is 2018, I'm sitting here, I'm just like, I've got to be able to start holding properties, like owning properties, because wealth comes not from selling, but it comes from owning, right? And I knew that. I knew that, but quick money through flips and wholesale deals and stuff like that can get addicting. So be buyer beware. I'm a recovering flipper and wholesaler. I might do less than 20% of the deals I do a year of those. But I started to have that shift where I said, hey, I need to learn how to access capital so I can actually keep these good deals that I'm finding. So I learned how to raise private money through everyday average individuals, and I also learned about creative financing, which we're going to focus on tonight. And that's how I funded the two portfolios I have, the one in Louisiana, the one in Mississippi, has been through those two methods. So, but I did my first creative finance deal in Hammond, Louisiana, Hammond, America. And this was a tired landlord who tried listing on the MLS twice. This was in 2019, something like that. Tried listing on the MLS twice, couldn't sell. It was 3 houses, all on a corner. Some of you guys remember them a few years ago because I sold them. But long story short, a wholesaler had them. Just the numbers didn't work, right? No one was biting on those deals because, didn't work for cash. And so eventually the wholesaler was wanting to just give up and quit. I said, man, you've done a lot of hard work here. Make an introduction to the owner here, and if I can make something work, I'll kick back a finder's fee, something like that. So he did. So I go and I start working the deal with talking to the seller. And at the end of the day, I find out that the properties, it was 3 properties, and they were on 2 different loans. Really, one of them was 2 houses on 1 property. And long story short, I bought them creatively. I ended up selling one of them, and then I kept the 2. It was 2 houses on one, it's almost like a duplex. It was 2 houses on 1 tax parcel. It was a 3-2 and a 1-1. Long story short, took over that subject to, and but they had tenants in them, so I bought them with inherited tenants, right? And then they also had some deferred maintenance. So I was so excited, I got my first creative deal, right? But then, repairs started coming up, right? Different things like that. Long story short, I had, this one went through a breakup, this one had to evict, it was this whole thing, and then the tenants aren't playing, but I have the underlying promise to keep. And I love the idea of the low to no money down idea. But I failed to read about the reserves part needed for when it's vacant and the repairs. Y'all, that ate me up. So I ended up selling them because they needed full renovations. It was just so much deferred maintenance. But the proof of concept was there for me, right? So I sold those, moved on from those. But the idea there of, hey, I went through the rigmarole. I learned. I said, man, I can do this again. And I can learn how to go right my wrongs and have reserves and things like that. But ultimately, because in my mind I always thought that creative financing was for broke people, right? That I had to beg the seller to do, to finance the deal to me, or to let me take over the existing, buying the property subject to the existing loan, because they were doing me a favor. But I realized that was a lot of the way that I was approaching it, right? But that's really a myth. Nowadays, the subject to deals I'm doing, it's not because I can't fund the deals. I buy deals all day long using private money, right? Other people's money. So I'm like, hey, I can make you 2 offers all day long. Which one you want to take, right? But at the end of the day, it's not necessarily, hey, let me beg you to do this because I don't have the money, or this, that, and the other. It's generally going to be, and I'll talk about this tonight, is I'm helping solve a problem for them. So, I do want to say this, that this is an integrity-based meeting. So, I haven't said this actually here in a while, but I want to remind you guys, the idea of this is we're here to do good business with good people. And one of the things I learned very clearly with creative financing is you can screw people over. It is a tool, if not in the right hand, can be used to harm someone. So with that being said, this is an integrity-based meeting. If there's anyone found to not be wanting to do business, good business with good people, I have no problem saying, here's one of 7 doors. Whatever that looks like, because at the end of the day, that's one of those things we want to keep in mind. And with creative finance, I'm always keeping that. We'll talk through how that might come up. So with that being said, let's open it up with what is a subject to deal. So, again, who here has done a subject to deal? All right, we got about 4 or 5 people. All right. So at the end of the day, a lot of you guys have actually, this room, a lot of you guys have actually done subject to deals. You just don't know it. Because you've bought, who here has bought with an inherited tenant in place? Meaning there's a tenant existing. Handful of you guys? Right? Obviously, I just told you I did. So you bought that subject to an existing lease, right? You had to honor that lease that was in place, right? I've got a property right now with a utility easement. How did I know? I recognized it whenever the utility company was driving along the back end. I was like, what the? Oh, okay. I bought that subject to a utility easement. You have servitudes. Various different things. So when you buy properties, oftentimes you're buying them subject to, kind of like with an exemption of something, right? So ultimately, whenever we say we're buying something subject to, you want to make sure clear of what you're buying it subject to. I'm buying it subject to the existing mortgage. So a huge part of that there is you want to make sure that you're clarifying that. Because I have bought deals subject to many other things. I have a deal that I bought subject to a lot of different mortgages and judgments and liens and the utility easement and other things, right? It had a whole list of stuff going on. But ultimately here, what we're talking tonight about is buying something subject to an existing loan. This is just one of many creative financing tools. So understand, when I talk about the tool belt tonight, this is just one. This tool does not work for every seller. And every deal, it's not, I don't walk into me, I'm like, hey, I'm going to buy this one subject to. No, that's not usually what I do when I go on appointments throughout the week with sellers. So that's going to be our premise here. We're going to talk about exactly what does it mean, what is the process, anything like that. So ultimately, what happens in a subject to deal is where the seller, the motivated seller, is going to agree to sell the property, but to keep their loan that they have in place. So a big reason why that's important is, who here has just recently, anyone here got a loan recently that they want to say what the rate's been? You want to yell out some numbers? 6.125%. Anyone else? My significant other is buying right now. I think they got it at 4 point something. It just recently went. It dipped down a little bit for a primary, but that was for an investment. Anyone else? Any other loans recently? Yep.
I got a construction loan for 5.75%.
Okay.
12 month.
So some of these things we're seeing, right? We've been seeing a little bit up, a little bit down, right? But we've historically had very low interest rates. The lowest I saw was 1.95. I'm not gonna lie, I was salivating. I was like, I knew I think they paid some points as well, some stuff like that. It was like 30-year fixed, 1.95. I was like, good Lord. Have we been spoiled? Fun fact, I mentioned Aussie Steve, when we had the panel last month, how many of you guys know that like most other countries don't have a 30-year fixed loan? Right? We're spoiled in many different ways. So, with that being said, you've got a property, so let's just say 123 Main Street. 123 Main Street has title, like a title to it, right? The deed. But then that seller at one point decided to get a loan, right? So they have a loan on the property. What they're doing is they're selling the property to you, but that loan is staying. So that deed is transferring, but that loan is staying in place. It's staying in their name. A lot of you guys have heard of something called an assumption of a loan, especially back in the 80s, right? This is not that. Usually with what was that?
We're not assuming the loan.
Correct, we're not assuming it. An assumption, generally speaking, is when you actually go to qualify for it. So there's an existing loan, and so you'll get with the bank, you're going to give your credit information, your tax, all that stuff. You're going to go through the normal process to qualify for it. And then you assume it, you take it over. That was a really big, a lot of people think it's that. It's not. My credit is not involved. My W-2 or lack thereof, or tax, returns or anything like that is not involved. Ultimately, at the end of the day, that loan is staying in that seller's name, which is where we're going to talk through some of the kind of the pros and cons and some of the things you want to address. But ultimately, you guys say, hey, okay, so I'm getting to buy a house that has financing already in place that's tied to someone else, and I'm getting to tie into that really low, cheap debt that's been out there, that's everywhere right now, because everyone refinanced the last 2 years, right? Or bought a house, or this, that, or whatever. So there's a lot of cheap debt out there. But Courtney, how do you get someone who's going to sell you a property subject to? Why would someone ever do that? Mr. Robert Reed, his wife, sweet as can be, would always say, how do you keep finding these free houses? How do you keep finding these people who do these houses with you? So why would someone do a subject to deal? So first of all, for a buyer, us, right? What are some reasons you'd want to do a subject to deal? What do you think?
You're not using your own cash.
All right,
Low down payment?
credit score, you don't want
Maybe if your credit score is an issue. What's another one?
employment.
employed, maybe if you have, it's your self-employed, banks don't often love that. We just talked about a big one, interest rates, right? I mean, here's one of the big things. So I got in the industry in 2014, so you guys know my story. The industry's been doing this, right? I have not gone through a shifting market. Time will tell what these next few months and years will happen for us, right? Will do. So what am I doing? Because I feel a huge sense of responsibility, not only for, like, say, my portfolio for my tenants and stuff, or for some of the properties I own with partners, or like if someone's lent money to me, I feel a huge responsibility to be, a sound investor to you guys, right? To the REIA, to the radio show list, a lot of things like that. I feel a level of responsibility, myself, my future, my family, that I want to make sure I make sound decisions in a changing market. So one of the big things I've been doing is I've been tying myself to what I call respectfully, the gray hair guys. These are guys who've been investing since the 60s and 70s. So, for example, last month, how many of you guys were here for the panel? Yeah. One of them was on there. Mr. Leon Johnson was on the panel. That's who you guys would call him, the fly fishing guy? That's what I'm talking about. But then another one was Mr. Wayne Sanji, Sr. These are gentlemen that I've learned from and that I respect. There's others. One of them is considered, a lot of these guys are familiar with creative financing. They're not the gurus who are just used to 08, right? They've seen a thing or two. One of them is Pete Fortunato. So Pete's one that I've really sought out, and I'll go spend either once a month or every other month with him for about a week in Tampa where he lives. Pete's considered the godfather of creative finance. And so the last trip where I was there, I said, hey, Pete, what did you do? So he used to have his real estate license, right? I said, what did y'all do in the 70s and 80s when the highest thing he said he saw was 21% interest on a loan? Like, ow. Like, we're dealing at 2% interest, and he said, Courtney, so he's familiar with buying subject too. He said, it got to the point that with real estate agents in the retail world were selling properties subject to, so the seller right here, their buyer couldn't afford the monthly payments with a 20% interest loan or an 18% interest loan, right? You think that would throw your principal, interest, taxes, insurance, payment kind of whack? Well, they had a 7% loan. Did that loan not bring value to the deal? You see what I'm saying? So now they had something to work with. So their house is sitting on the market, and it's not moving. That is when you start to utilize that loan as currency in the deal. Let me say what I mean by currency. I remember how I talked about earlier, the baseball cards, like to use it to do a part of the deal. Same thing as that. So many times we get so traditional in our mind where cash is our only currency, or a bank loan that we qualify for is our only currency to buy properties. But the reality here is there's many things that are currency. I mean, promises can be currency. A promise to pay. That's what I do with my private lenders, right? I say, hey, you've got cash, but I will give you a promise to pay. Or the currency can be a lease, right? If any of you guys like commercial properties, how valuable is it to have a whole bunch of leases in place with the commercial property, right? Those are currency. But so many times people are trained through a traditional fit in the square box, color inside the lines, right? So back in the 70s and 80s, that underlying existing loan, 7%, whatever it was, became a currency to help them sell the property that was difficult to sell. And back then, it was very common to have to be creative. Y'all, I got invited recently to speak at some brokers. I've been getting invited to speak at brokerages for years now, but there's some that I never thought I'd get an invite. I'm a little bit too dirty of a capitalist landlord pig type of thing, type of comment. I'm gonna keep those to myself. But the reality here is, they called me up. They said, hey, they gave me some boundaries in which to play in, but they're like, hey, we need to learn some creative tools because insurance is killing New Orleans, right? The insurance policies, premiums going up. And they're like, we need to know some options to help our sellers and buyers buy when this is throwing principal, interest, taxes, insurance out of whack. So with that being said, buyers Why would they do it? It's obviously the low interest rates, but sellers, they're doing it because it's a currency to help them do a deal that otherwise might be struggling to move. I'll break down how I just bought my new primary residence, new to me, new primary residence subject to the existing loan. All the other deals that offers they were getting were cash, and it didn't work. And they're sitting here, they're like, hey, I need to know some more options. So understand that there's also a level that they need relief from that pain. And I'm going to talk about that. So at the end of the day, I'm not going to walk up to Bob, who doesn't have a problem, and say, hey, Bob, let me buy your house subject to. He's like, no, get out of here, right? Because he doesn't need to utilize that currency, right? He said, no, here's the price, the retail price, whatever, or hey, anything's for sale, make an offer. The reality here is there needs to be some sort of problem they need to escape, a pain point they need to escape, and I'm going to talk to you about what that looks like. But the reality here is I have found numerous times, look, if someone's going to make a whole bunch of money by selling their house, they might stay up one night excited about it, but otherwise they're going to go to sleep. But if they can't sell their house and they can't afford the next 2 payments, do you think they're losing sleep? Yeah. Ask me how I know when I have sellers who, I had one, she's like, I'm so sorry, and she's like dropping like all these Ambiens and like in front of me, I'm like, you gonna be okay? Like, please don't leave. Like, are you going anywhere? Like, you have a friend? Like, are you okay? Like, honestly, I just walked a pre-foreclosure in Slidell last week or something like that. The husband and wife, the wife could not, she was so stressed, she kept walking out every 20 minutes to go smoke a cigarette. She came back in, what did you say? I'm like, you want to scream outside? She's like, no, it's too hot for that. I'm like, okay. But like, again, stressed, so stressed, right? Losing sleep over it. So at the end of the day, cash doesn't always work. So ultimately, Mr. Leon, he said something brilliantly last week, actually at the Poplarville, the Pearl River County REIA. He was speaking on creative financing. It was really good. But he said creative deals are between 2 people, buyer and a seller, and it's an intimate transaction. What I have found is it's very difficult to do when there's a third party in place. I just have found that over the years, stuff that has maybe a wholesaler involved or a realtor involved, not that I don't want to provide a solution here, it becomes difficult because it becomes a long-term agreement that we're making, right? It's being done over time, and it's very difficult. It's like you don't know who that person's going to be, right? But especially with subject to, it's a lot more intimate, and we'll talk about that here. All right, so because it's between 2 parties, they want to know, are you competent and trustworthy? You say you want to buy my house and take over and make my payments. How do I know you can do that? That you're going to do it. I mean, these days, back in the day, there was a lot more people who were people of their word. These days, it's a rare breed, dying breed. So the reality here is, that's also why I led with this is an integrity-based meeting, right? Because there's literally a guy who went to jail in New Orleans for scamming people through creative finance deals. And he just got out of jail, and he's trying to do it again. Like, come back in the meetings and stuff. I'm like, bro, like, you're just in your catalogs, man. You kind of can't, like, come back to it. But ultimately, at the end of the day, obviously, a huge part here is they want to know, who are you? You're offering this, but how do you know? I'm a huge fan of understanding that, yes, we're in the house business. There's just no doubt about that, right? I deal in houses. But I disappoint so many people because I cannot tell you the color of the walls or the flooring, the actual house things. Because what I really feel like is I'm in the people business, but also more than that, I'm in the business of making promises and keeping them. Yeah. That is how I've been able to do the amount of deals I've been able to do over the years. Or to be able to do things like this, to educate the community, whether it's on the radio or at brokerages or things like that. Because ultimately, I care about the promises that I make. And I care about keeping them. So that's one thing that a seller's going to want to know, right? They may need to sell, and that ability to sell subject to may be an option, but they want to know who you are. People do business with people they like, know, and trust. Usually, when I'm sitting, so the one I bought, it was my, the primary residence one. It wasn't until the second hour sitting at his kitchen table that he actually come out and say that he was behind on his mortgage for 7 months. It wasn't until we got to that part of the conversation, because at first he was like, oh, I'm just looking if I need to fix it up myself, come out of pocket with money. And I'm like, dude, you gotta fix a good bit of stuff, right? But ultimately, that's when it eventually came out. He's like, I don't know what I'm gonna do. So ultimately, that's something people are looking for. Are you competent? So can you actually do it? And are you trustworthy? So how do you do a subject to deal? So this is where I'm gonna get technical with you guys, okay? So ultimately, I talked about you got to find a seller with a problem. This is one of those big things. I'm not going to look in this room and say, hey, who wants to sell me their house subject to? No, right? I'm looking for a very small subset of the community who needs to sell. And also, on top of that, cash is oftentimes, it's where cash doesn't work. So what I'm looking for, and that's why I don't have an appointment. So on my calendar, when I have appointments throughout the week to go walk on properties, I don't say, oh, well, this one's going to be subject to, this one's, they might have some indications that it might become a good lead based on the conversations we've had with them, right? But I'm not going to be like, oh, well, this one I'm going to buy it subject to. That, I want to know the problem first, and that problem's going to dictate which tool I use in my tool belt, right? It's going to determine whether I, buy this property on a bond for deed, on an installment sale, or if I buy it on a seller financing credit sale, or something like that, or if I buy it subject to the existing loan. Why? Because if they own it free and clear, there's nothing for you to buy it subject to, right? But if this is the main tool, which subject to has become a very popular topic, right? A lot of people, it's their main understanding of a creative deal, and so they think every deal, it's like a big hammer. They're like, oh, well, everything's going to be a subject to. Well, not going to qualify for every deal. I do not want to buy everything subject to. There's some things I just don't want to touch. There's an existing loan, but I may not want to touch it. We'll talk about that here in a second. So one of the big things I want to encourage you to go direct to seller. That is not easy. It's not easy. But I want to encourage you to go direct to seller. If you don't know how to go direct to seller, I want to encourage you to learn how to use the tax assessor's records, to learn who's an owner of a property. I want to encourage you how to research how to skip trace people, look people up, or send them a letter. Or my favorite, I keep one of these yellow guys, legal pads in my truck, some blue painter's tape, and a Sharpie marker. I have often left notes on doors, things like that. I actually just had one on the street that I just moved on. So I've been going my morning walks, I see it, left a note, got a phone call within 2 days, and then walked it. Those things I love them, they work. That's how I bought the laundromat over in Gulfport. And so where I noticed, hey, maybe there might have been someone who just recently came and cut the grass, but there hasn't been someone in a while. I'm like, great, they're coming back probably. Maybe leave a note. So you're looking to find a seller with a problem. You want to get direct to seller. And find out, talk to me. I say, hey, cash me up to speed. Why do you want to sell a nice house like this? Or why do you want to sell? Why do you want to sell to an investor like me? Because they can get the most money selling to an end buyer. That's a Pete quote, by the way. Pete, with a straight face, will say, why do you want to sell a house like this? And it can look nice or not nice, right? Hey, why do you want to sell? Here's the thing is, anytime I talk to a seller, I'm generally going to open up with that question, or, hey, I heard you're looking to sell your house. Catch me up to speed with what's going on. Because I want to know the story. 5%, I need to know the bed, bath, square footage, information about the condition. But so many times I hear people focus 95% on the bed, bath, square footage, condition, when I don't even, again, 6 bricks bones. 5% of the conversation. 95 is, why do you have me on the other end of the phone? And not a realtor to sell it to the open market. A person who's going to live in the house is going to be able to pay the most, right? They're going to get a loan, they're going to love it, they're going to get use out of it, they're not doing it for profit, right? They're very emotionally attached to properties. Not me. I'm like it or leave it, right? So why? I want to know that there's a problem. No problem, no reason for me to be there. Look, if you're just trying to save 6% commission, I promise you, honey, I'm way more expensive than that. I need more of a discount, right? So at the end of the day, no problem, really no reason for me to be there. But, like I mentioned, problems don't always come out right away, right? So generally speaking, if I hear some sort of reason that they need to sell, and they need to sell to an investor like me, that's when I then go to 7 point and go, get with them. I'm going to take a look at the house. Of course I need to see what's going on, right? can they not sell because, okay, so the seller, the one that I bought, the primary residence that I bought subject to, it needed a new roof, like today needed a new roof. They had two issues that needed to be repaired, and it was already a 30-year roof. So at the end of the day, like it was, shot anyway. So that, roofs are not cheap these days, right? The good deal that I got was still 15 grand, right? So like, that's not something someone generally just has right out of pocket. I mean, a good deal, cheap deal I can do for like 4 or 5, right? But this was not a smaller house. So he needed that. 2 of the bathrooms needed to be, it's like grandma's house. Wallpaper, some other things like that. They had some rooms that, one of them, like they were both partly gutted still, so that's not gonna get a loan, right? All these things, they're not gonna be able to get a loan on the property. They're gonna get a construction loan, cash buyer. And so they had reached out to a few people. And at the end of the day, the cash offers they were getting were less than what they owed on the loan. But I didn't learn that. Up front, I just learned, well, I just need to know if I put, should I put some money into this, and maybe could I sell it? And again, I was like, eventually I learned he hadn't been paying his mortgage for about 7 months. But that money wasn't sitting on the side either, right? So it's not like you could go throw that into the roof or, something to make it easier. So cash wasn't working. And honestly, I said straight up, I mean, some investors can vary, but a lot of times we're in a general ballpark, right? Like some of us run our numbers very similar. So at the end of the day, I said, I'm actually not too far off from that guy. So talk to me why his number didn't work. And he said, honestly, it's because of what I owe on it. I said, all right, so if the only offers you're getting are less than what you owe, you can bring money to the table. There's a process called a short sale, right, where you go and negotiate with the bank. That was my first ever purchase, so I was like, that's always an option. And ultimately, he's just like, I can't, those things. I said, well, look, I do have a program where if cash doesn't work, there's a way that I can actually buy the house. I can take over making your monthly payments. If that makes sense here, would you want to consider that with me? He said, absolutely. I need anything. I need to know and that's when he started saying, Courtney, actually, it was almost like he took the cards over here and he said, hey, actually, I haven't been paying for the last 7 months. The first one was in Ida, right? I took a forbearance, but I really should start paying the next month. But it was just kind of too easy to just not keep paying. So, you saw that a time or two, right? Rick, you might see if the ACs are, I think they put a lot. I'm not gonna lie. Like auto to the left.
Yeah, that's on.
They have a little button that can go down on the left of the screen. There you go.
Oh, yeah.
Yeah, I think they freeze them. And then I go back and anyway, so we're finding them, hey, what's the problem, all this. I want to look at it. First of all, normal way you underwrite a deal is, if this thing was fixed up, what would it be worth? So the house I bought fixed up and with the home would be worth $245,000 fixed up. But, obviously needs work, right? It needs about 30 to 40 in work, just depending on what I do. Mostly cosmetic, except for the roof, a little bit work with the septic, some siding work, stuff like that. And so all the cash offers were coming in way below that. So I bought this house subject to the loan at $149,000. So Courtney, that's almost, that's 95 grand below what it's worth. Of course, 40 is what me living in it, some of it's being, I'm paying some of the rooms right now, it's sweat equity. If I would be flipping that house, it would be more like 60 to 70, right? Because I'm touching a lot more things, I'm doing a lot, and that's where everyone else is writing their numbers. But I have different plans for this house, I'll talk about that here in a second. So there were some opportunities where I was able to do a deal. This deal doesn't just fall in your lap, you have to create deals, right? So ultimately, I had to underwrite the deal. What would it be worth? I had to run comps. What would it be worth fixed up? What are the repairs? Those things matter, right? Hey, what could this thing rent for? It depends on your exit, right? What could this rent for? What am I going to do to it, right? I have different repairs I'm going to do for a flip versus a rental versus short-term rental versus, whatever. So if you didn't catch it, the way that I offer it is I say, hey, look, Generally, I buy with cash, but sometimes cash just doesn't work, and I don't like to be a type of person that says I can't. I like to be the little, the little engine that could. So this is what I can do. There are sometimes that I'll pit sellers through a program where I buy the house by taking over the payments, and if that needs to happen, I'm happy to talk to you more about what that looks like. But ultimately, first of all, I eventually learned that his wife was on the loan. I said, but eventually I'm going to want to talk with you and your wife about this, because both of you are decision makers, right? I don't want to just win one part of the party and not, have the other person on board. Generally, I do that over, not margaritas, but Mexican food, or coffee, or some other type of food, right? Like, hey, generally if a seller or someone wants to consider creative, they're going to have questions, right? And I'm not trying to, let me get you sold right now, sign it, like I don't want this to keep them up at night, because it's going to be a longer term relationship. The bigger offer I make is lunch or coffee, dinner, coffee, whatever, right? Many times, my first deal was actually done at that, so by the way, when I sold those houses, they eventually came back around to me from the person I sold them to, and now Cole owns them. And the first creative deals that I did, but that seller, when I bought those first deals, subject to, was at the PJ's in Hammond, right there by the mall. And because he was in a scooter, and he came and sat up with me, and we talked, and I talked him through, this is what it would look like. And he'd ask questions, I'd give him answers. I'm not trying to hide anything. I also find down here in the South, when you like break bread or you go sit at the, it's a lot more like intimate, and people can start to like, know, and trust you more. Like honestly, it's like half of my secret sauce is just saying like, hey, I'll pay lunch. I'll pay for lunch. And most people like Mexican. And then like, but I talk about it being a program. And I'll also talk about like, hey, I also with cash, but obviously if cash isn't working here, right? So one of the first things I'm going to want to see is the authorization. Well, let me go ahead and say this. I'm going to want to see the most recent bank statement, okay? The reason why I want to see this is some really important documentation on here. So sometimes I will literally go to the home office with them. They'll pull it up and print it for me right there. I want to see what that most recent bank, not the bank statement, the mortgage statement is, because I want to see a few things. So right now, we're on the 9th, so the most recent one came out a few weeks ago for August. But, toward the end of August will be September's, right? So it kind of depends where you'll be at the most recent one, but that's what I want to see. Because I want to look at a few things. Number one, are they current? Sometimes they're not, okay? And so then I want to see how much are they not, right? Second one I want to say is, what's the payoff? What's the balance, the principal balance of it? Bless you. Another one I want to look at is, what is that monthly payment? I have one that I'm looking at right now. It's $614 a month. Super cheap. Thankfully includes principal, interest, tax, and insurance, which is another thing I'm looking for. Have they escrowed the taxes and insurance? Because some loans don't, right? That you need to know that, because you may say, oh, this is a deal at $613, but then if you have to add $400 in tax and insurance, it may not be a deal, right? What percent of interest is it? I'm not too worried about the interest rate. I'm about to do one that's almost 5%. I mean, that's what I could go get at the bank right now. Here's the thing is, I like it for a number of reasons, and I'll talk about that here in a second. Another thing is I want to see who the lender is. There's usually going to be a lender or servicer on there. There's a few I'm not a big fan of, but is it a large bank? Is it a Wells Fargo? Is it a Rocket Mortgage? I have some with them. Is it Loan Depot? Or is it a real small local bank? Right? So that's going to actually really matter, because some of the really small banks, they keep those loans in-house, versus some of them, they're so big they lose it. You know what I mean? So those things, that's going to really matter here. One of the things is I walked a pre-foreclosure in Slidell, and I looked at the loan, and it said that it had been accelerated. First time I ever seen one of those on a mortgage statement. They were also behind $40,000. on a $215,000 house fixed up. COVID treated them well with that, like that little buffer, right? But they were so far behind, and they had their foreclosure delayed multiple times that the lender ultimately called the loan due and accelerated the payment due. So yes, they were behind 40,000, but what was really owed is 190 or whatever the principal balance was. So that was a fun one. You see how there's some valuable information on there? Another thing that so sometimes they say, I don't even know where that's at. So one of the things I do is, if they're just either so stressed or just, I don't want to say they're a civilian, but they just don't know what to go and ask and, get any of that. How do I even do that? This, that, and the other. First of all, I'm like, hey, do you have an online login code? Do you get it in the mail? Do you get it online? How do you get it? Sometimes I have to walk them through that. Or sometimes the more simpler thing is I say, hey, I do have a form I can fill out. Because look, if Bob calls my bank that I bank at, that I have a loan with, they're not going to let Bob talk to them about my account. They shouldn't, rightfully so. But they do have a form that does allow people to speak about an account on someone's behalf, but it has to get filled out. So that's called a third-party authorization to release information form. There is a general form, this third-party authorization form. There's a journal run that I keep, but if I'm dealing with Wells Fargo, I'm going to go on Wells Fargo, I'm going to go on Google and say third-party authorization release form Wells Fargo. Because if they have a very specific form that's for their bank, I want to use that. It will. That's a little pro tip right there. That is. It saves a lot of time. For example, some of them don't want the third-party authorization. They want limited power of attorney, or they want it. So here's what I think. If they have a customized one, so if you're dealing with Carrington, if you're dealing with Loan Depot, I usually will say third-party authorization form, and then I'll put in the servicer or the bank. If they have one, usually it's on a site that you'll never see, just Google it, and you can download it, and I use that. Or if there's not one, I will use a general form. And then what I do is I get them to sign. I get both people who are on the loan to sign. It's going to include them putting their social security number on there. You need to put the loan number on there, so you need to look at that statement for that. Or need to be able to pull it up from public records or to reference that loan number, because they need to know what you're trying to reference here. And get them to sign that, and then you call the bank, wait online forever, say, hey, I have this, they're going to want you to fax it. Sometimes it's an email, thank God for those people, but you got to send it to them. And then they eventually, sometimes it's a 24 to 48 hour review period before they will approve it. They'll send it through legal. So having their document can help expedite it, because, hey, this is our form, right? We know this. All right, so sometimes I do that, and then I'll call the bank and say, hey, can I get the most recent statement? Or maybe if I need to ask about some other stuff, like find out their most current payoff, because maybe they're in foreclosure and that number's changing on a daily basis. All right. Here's another thing. I'm going to ask them. I say, hey, I haven't looked yet. I'll be looking soon. Is there anything else on title, like a lien or a judgment, that I should know about? That is going to be that's going to maybe a deal breaker, or it could change the whole game. So I'm going to say, hey, is there anything out here swirling? Because a lot of times, and we'll talk about this in a second, but it's, they're generally they're in a financial distress situation. I've got a subject to I'm looking at right now. They didn't even know it. I broke the news to them that they had a credit card judgment against them. They knew it, in the sense of they haven't been paying it. But the fact that they actually had the judgment and it was now a lien against the property, that's going to matter, because now that's a part of the equation.
How do you find that out?
Public, so you can go and look at the courthouse and public records. You can pay for a title company to do what's called a title abstract. All of those things. But I want to know what those things, because that's a part of me underwriting the deal, right? Here's another really big one that a lot of people don't talk about, and I don't want to say it bugs me, but I'm like, that's asking for disaster. Here is, all right, taxes and insurance. Most people, if they're currently living in the property, generally are going to have what's called homestead exemption and their insurance is going to be an owner-occupied policy. Why does this matter? So if they're,
Cheaper.
it's cheaper. Bottom line, it's cheaper.
They don't, they're out of town.
So if they have homestead exemption, how do you find that out?
Tax assessor.
Tax assessor's office, you go look on it, you pull it up, you can say, it'll have a section that says homestead exemption. Or there's some other things. If they're a senior and it's frozen at a senior rate, that's a big one. Here's the thing is, the reason why I'm saying that is you're like, oh, $615 a month, principal interest insurance? Oh, it can rent for $1,000? Awesome, I can make money maybe. But then you change the insurance policy and you remove the homestead exemption or the frozen senior citizen rate, and all of a sudden you're like at $1,200 a month. You're like, I'm not making money. That's going to change the deal. It's really going to depend what's happening. And the owner-occupied policy, that's just one where I'm saying, hey, I'm going to be changing the policy to obviously a rental or whatever it is. That's a big one. Okay, so another thing, so I'm underwriting the deal. We've got, green flags here. So I'm going to disclose the process to the seller. You say, hey, if this makes sense, this is what it's going to look like, right? So at that point, this might be over the Mexican food or the coffee, or this might be at the kitchen table still. There's two ways I structure subject to deals, okay? The traditional way is the title, ownership of the property changes from seller to my company. But the loan that's tied to that title is going to stay in their name. So title transfers to me. That's a traditional subject to. The second way that I do it is a hybrid, where basically title doesn't transfer, but it is a bond for deed wrapped around their loan. So the way that it's done is, so the loan's $149,000. We're going to literally put in there all of the information for the loan. But the thing is the seller's never going to get, for example, if the tax and insurance go down or something like that, the seller's not going to start getting money every month. It's literally built to reflect the loan. Does that make sense? Sometimes a bond for deed, you have monthly payments that are pretty set in. We're like, no, it is a mirror to this instrument number, this loan number, this deal, okay? Title doesn't transfer. Title is still with the seller. Sometimes I do this. So I actually did this with my primary residence. One of them is subject to, we'll talk about this in a second a little bit more, but a confused mind says no. Yeah. So you may come across someone who comes across that transaction and they may say, hey, you did something completely illegal. It's not illegal. I meant to bring one of my HUD statements that said the subject to line. There is a HUD statement when you go to closing. That HUD statement has a line, I think it's line 52 if I remember right, or 5 something too, that says subject to loan, colon, and then you put the number. The HUD statements have all these lines you can fill in. That is a pre-filled in one from title companies. Next time you have a HUD statement, go read through it, right? But, so ultimately here, and look, I'm not a licensed agent. I've gone through the training. They have this, it's a paragraph, not much, small section, but this is in the Louisiana Real Estate Agent Training course. So I'm going to do one of those two. One of the reasons I do the hybrid is, for example, this one is a primary residence. One of the things I wanted to be cautious of is more people are familiar with bond for deeds than subject to deals. And I kind of wanted to bring some insulation there. If I have a seller that's prone to bankruptcy, divorce, and things like that, I'm going to absolutely transfer that title. So it's just one of those things. It's gonna, I structure it. That's how I do it. Some people say you only should do it the traditional way, where title 100% transfers to you. I do it on a case-by-case basis. For me, it's also going to depend on your exit. So this primary, go ahead.
Courtney, I've never done the bond for deed. Is there a certain...
So you're in Mississippi, that's a contract for deed, a land contract.
Contract for deed, okay. I was just saying, is there a reason you prefer it so much over the traditional subject?
So it's really going to depend on the situation.
Okay.
It's going to depend if there's maybe some more risk. If they're like, if that seller's more risky, I'm gonna go ahead and transfer title. Maybe if it, for example, the primary residence, again, with that one, I felt like it was a little bit more insulated from, again, confused minds say no. I'll tell you, you know, with that house, I plan to put my father in it, right? And I wanted to make it, bond for deeds are a lot more known than buying something subject to. I just wanted to kind of do it that way. Does that make sense?
Yeah.
So it's going to depend on what your exit is. I'm not a big fan. Okay, so in essence, this is good debt, right? It's low interest rates is what a lot of what we're getting, different things like that. But at the end of the day, it is a little bit more of a risky debt, right? Because it's debt that's not in your name. We're going to talk about some pitfalls here next. So you do want to make sure you understand these. So what are some pitfalls? And the reason why these pitfalls are important is you should adjust your exit strategy accordingly. So some pitfalls that you want to not only note as an investor, but you want to disclose to the seller. I do not sweep anything on the road. We talk about it over chips and salsa and queso. Like, it is literally something we talk about. First of all, we have the due on sale clause. Most commonly used one. Anyone in here have the due on sale clause called on them? Anyone? Not a single person in this room. I have only ever heard of one happening on the Gulf Coast with my friend Pat, and that was with a small, how many branches? They have 3 branches, I think? Like 3 branches, small bank, and the ex-wife walked in there one day really mad at him and said, not Pat, but the seller, and said, oh, you won't believe what Johnny did. Johnny sold that house and never paid y'all off. And the cashier was like, something illegal happened. Let me go talk to my boss. So then the president of the company called Pat. Hey, I see that you have this house, but you never paid us off when you bought it. We have a loan on it. He said, yeah, I bought it subject to. Long story short, he was flipping it. Literally, it was on the market under contract. And so they were going to call the loan due. Calling the loan due is basically there is a clause in the mortgage. The mortgage is 20-something pages. I don't blame, or 15-something pages. I don't blame you if you haven't read it. It's a lot of legal jargon, but there is a clause that says that they have the right to accelerate payment being due. They shall, not that they have to. They just have the right to. Why is that really important? They can. It's good to know that they can, but you also need to disclose that they can. But here's also something that's important as well. They don't have to. They can keep it on their books, knowing that the person who is making that payment is not the person who they underwrote as the buyer, the borrower, right? A huge part to that is, a lot of times they're going to see that and they'll say, hey, title's transferred, this is here. The reality here is, it does happen, but not as much. There is due on sale clause insurance that exists. I personally don't buy it. I don't have the need to. But here's the reality is, if a house is worth, let's just say $100,000, fixed up, a house is worth $100,000. If it has a loan for $150,000, do you think you want to buy it subject to? I'm serious. Is there anyone in the room who would buy it? I knew Bob would say that. Bob's risk tolerance is very high. The reality here is, some people would say it depends, right? But here's the thing is, so some people are talking about, hey, if this house is upside down in value, right, worth $100,000, they owe $150,000, let me go buy it subject to that loan. To be that honest, I might. Now, I have a very low risk tolerance, which is also probably a level why I do the bond for deed sometimes on some deals versus some others. But so the reality here is, I'm not a big fan of saying, hey, doesn't matter what they owe, just take it subject to. Why? Because if they call it due, and you've got 30 days, you've got to come up with the money. And I talked about this earlier. I really care about the promises I make. So that due on sale clause, they don't have a due on sale clause division. They don't. They're, again, so it doesn't happen often. You need to know about it. You need to talk about it with the seller. So I tell them, hey, if this were to happen, I'm going to give you a call. So at the closing, say we go to closing, This is not, this might be the last time you see me, it may not, but we might talk on the phone, right? Here's the thing is, I mentioned it, I bring it up. I talk about how their credit is still tied to this loan. So this is that integrity part. If you stop making payments, their credit will be hurt. That is a really important part to this, which is also the part of don't do this if you can't keep your promises. Literally, I am seeing people having legal issues because they bought property subject to and then they stopped making payments. That is one that I'm looking forward to seeing what that case study looks like because there's some issues there. Here's the reality. Let's flip that. If they didn't make their payments, but I'm now making them timely, that can also help their credit, right? Here's the other thing. If they want to buy another house, will their debt to income be thrown off because they still have this loan on their credit, right? So what I found with that one is up to 75% and sometimes 100% of that debt can be removed from their debt to income if I showcase those payments made. It's going to depend. Generally, they're going to, it's going to be a timing factor. Do I have 12 months of payments? So it might only be 25% if I only have made one payment, right? It's going to depend. Here's the thing: is I tell them, I say, hey, if you're going to buy another house, I want to talk with you with the lender, and we talk through this. We'll show paperwork, all of that. So it's absolutely possible to get them to excuse that percentage or reduce a percentage of that debt on their debt to income. So keep in mind that this is, again, a longer-term relationship with sellers. Some further due diligence, this one is not talked about often enough either, is you're buying it subject to what? What is that mortgage? What's going on? A really, really common one is you don't want to buy it subject to an adjustable rate mortgage. Why?
Because you'll have an 8% mortgage.
It can go up. Many times I've had people so excited come to me, hey, Courtney, oh my gosh, I got a seller who might sell this subject to. And I said, okay, have you looked at the mortgage online and see what's going on, right? Like, well, go to the courthouse, pull it up. Because don't ask them, they're not going to know. The seller's not going to know. So I go look it up with the courthouse. And that's where, if it's an adjustable rate, usually it's a rider on the back end of the last few pages of the loan. So I've seen them where, hey, today it's 3%, but on June of next year it can go anywhere from 3 to 8%. Do you think that will kill the deal? Yeah, it'll have a timeline in which and a range in which that adjustable will happen. Again, are there any other liens or any other title issues? Who else is on the title or the mortgage? You need to be dealing with decision makers. You're excited. I know, Maria. I know, Maria. So another part of this is further due diligence is, again, taxes and insurance. You should be getting quotes for taxes, on insurance for everything.
I have a question about the tax benefits. Like, are you gonna lose the benefits when you do buy subject to, or like it's just
So Bob, you want to give a quick answer on that? Who gets the tax benefits when someone sells a house?
So,
No,
well,
not when
they sold the house to
when you
subject
file
to.
your taxes.
If they sell a house to you, it may be a tax-free sale to them because of Section 121. But as the owner, whoever makes the payments gets to take the tax deduction.
That's what I'm saying. So you lose this whenever you buy subject to.
No, when you buy subject to, you take depreciation.
Yeah, you bought a house, the mortgage just came with it.
So you
Just
can
Just
still get
like if you would've got it in
depreciation.
your
The
name.
mortgage is still under the.
That doesn't matter.
Doesn't
She
matter.
may-
It
Just
is-
the
You're
debt
making
is
an
in their
ordinance.
name, but you're taking title,
Okay.
so you get the write-off.
Okay, let's just say you've gone through all this due diligence, everyone's on board. The next step is to do a purchase and sale agreement. In the normal purchase sale agreement, they're gonna have a section that says the purchase price, right? That is literally, I'm gonna look at that most recent statement, and I'm gonna fill it in. And then underneath it, it's gonna say terms. Generally, that's when you put cash or whatever. I'm gonna put subject to the existing loan, and I'm gonna put the loan number, the information, all of that. That's where I'm going to put that on there. The next thing is closing. You need to make sure you close with a title company that understands this. Because at the end of the day, a confused mind says no. They're like, no, we can't do that, honey. Like, right? So that's one of those things you need to make sure that they know. I mentioned Florida Lee knows how to do them. They handle mine all the time. Not only do they need, I'm not saying are they investor friendly, I'm gonna say very specifically, have you done subject to the existing loan transactions with investors? Not wholesale deals, cash deals, quick, have you done that specific deal? Here's the other thing, decide, the title transfer part. Is it gonna be the deed transferring, the bond for deed hybrid? And then I have, at closing, so that transfer part's gonna determine, is it gonna be a deed? Is it gonna be a bond for deed paperwork? Like, what is that gonna look at closing? But I have a subject to packet that I use. You should, first of all, get this from the attorney, the title company that you're using, but write down this paperwork so that you can go research it. This is also a live document to me. I continue to add to this after each deal. So, bless you. The first one is a third party of authorization. Again, I prefer the bank's version over my general version if they have one. That's going to allow me to talk to the bank. I can't go get a loan in their name or anything like that. Second one is, this is me doubling down on the same thing. A limited power of attorney for the two people, if it's one or two people whose names on the loan or on title. I want to have that limited power of attorney. It literally, I want it to give me power to do anything in regards to this loan. I can't go open a new loan in their name. I can't go in anything. I just can work with the lender on their behalf. The second thing is, specifically with insurance. I want to be able, with that limited power of attorney, to be able to deal with insurance. The third thing is I want to be able to deal with property taxes or HOAs, right? Something like that. Anything that applies to that property, I'm going to name it in that limited power. If they have an HOA or not, I'm going to specify that. Ask me why this is really important. What happened in the last year? I want to throw this.
Insurance claims.
Insurance claims. Who here is going through insurance claims? We're going through on our subject to deals. Their name is still on the loan. So what happens to the checks?
It goes to them.
It goes to the lender. Lender makes a check out to who? Also the borrower. But here's the thing, if I did not have that limited power of attorney, when we did on Hewitt Drive in Hammond, when we got the insurance check, we went, no problem at all with that limited power of attorney. This paperwork is going to be really, really important. I've had multiple people reach out to me because they did not have this sorted through, or their limited power of attorney did not address things like insurance or this, that, or the other. And so it was a little bit too limited. The next thing that's important is an escrow release. So when I sold properties that I've bought subject to, a lot of times they'll prepay, taxes and things like that, or they'll pay taxes for the year, or they'll pay the insurance ahead of time, right? So if they go ahead and sell them, if any of you guys have ever sold normally, what do? You eventually get a check for your escrow overages, right? So then, if you get a check for $4,000 with the seller's name on it, and if you don't have the proper paperwork, you think they're going to want to, they see that check, they think it's going to be theirs? Yeah, they're going to think it's theirs. Ask me how I know. I've had it home to me, right? If I did not have that escrow overages release in there, I'm sitting right there. The moment I'm solving their problem, I say, hey, if I go to sell this thing, right, I want you to know that if this gets cut out here, I'm going to either have you endorse the back if I have any problem, but otherwise I'm going to use the limited power of attorney. That's what I'm going to use first. But if I have issues, some bids may, I'll have you endorse it. One of them, they just were giving me so much trouble that eventually the guy just met me there and endorsed it for me because I had the paperwork. Lastly, I have what I call my disclosure, the CYA. It's also what I call my handshake agreement paperwork. So if you're a licensed agent, it's a great place to, I'm not one, but this is a great place for you to disclose it. This is where I put in writing the due on sale clause, right? That the due on sale clause exists. I'm not making you any guarantees that I will refinance this property or that I will, pay it off sooner. One of the things they say, hey, Courtney, how long does this program last? And so I usually will say, how long is left on your loan? The one I just bought on my primary resident, 30-year loan, 27 years left. I said, I can give you 27 years. But I might surprise you and pay it off. I'm just not looking to make any commitments or promises before then. I have one that I'm walking here soon in Covington. 30-year loan. They just bought it. They need to sell. Can they sell right now without losing money? No. So these are things, that agreement. If, for example, some things are being left in the house, TVs, extra appliances, anything, agreements, Generacs, that's where I'd fill in the blank right there. Like any type of bartering other currency. This is also where I put in there very specific things. I put in there that if they have an obligation to contact me if they're going to be facing bankruptcy. That is very important. I also put in there they have an obligation to contact me if they're going through a divorce. Why are those two very important? Community property, but all of their debt and all of their assets are brought to the negotiating table, right? Bankruptcy court or the divorce mitigation. I also put in there, again, that I intend to make a profit. That this is not a charity, like I put that in my purchase and sale agreements anyway, but I put that in that disclosure form. Hey, I intend to make a profit here. I'm not hiding that. So those are different things that I put in there. So after closing, some really important things is you need to update. So this is after, so I have that, and then I get that paperwork doesn't get put in public record, right? That packet, that comes with me, right? I keep that in the file. I use those limited power of attorneys often and things like that, right? So what do I do after closing? I update the address with the bank account. Why? Because again, if a check gets cut, where is it going? Wherever's currently on file, right? The monthly statements, all of those things. Any important notices about maybe that the insurance went up, something like that. All of that, I want to make sure, so I generally send it to my PO box for my company, things like that. The next thing you want is there online account access, right? A lot of times what I do is say, hey, let's make a general, right now at the closing table, let's make a username and password that we both share. And part of the CYA, that disclosure is, we both agreed to not change it without notifying the other person, because sometimes they force you to change it, right? To update your password. And then I say, look, you can go there and watch how I make your payments on time. But here's the other thing is insurance. This is really, 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 really important. How do you need to go update the insurance? If you turn it into a rental property, but you keep their owner-occupied policy in place, and we have an item, insurance is going to laugh at you and say, thank you for paying us these last 12 months, but we're not paying you out. You're improperly insured. You need to make sure it gets properly insured. So what policies do they have? Make sure you do this when you buy. I've made a mistake of doing this a few months afterwards and had to fight that. You need to make sure that it changes to the proper policy, but then secondly, what happens is my company name goes at the top, and then at the bottom where it says additionally insured, the lender's name goes, like the lender goes there, but then additionally, it'll say the seller's name. And then generally I'll put as their interest appears, or as their interest applies. Because at the end of the day, now when a check gets cut, all three of our names are on there. I've got power of attorney and my ability to design my own, right? And then now we just have the lender, right, involved in that one. So that's really, really important. A lot of people don't do that, and post-site, I've got a lot of phone calls with that. So who would do this? Courtney, this sounds great. Who would do this? So what's a seller avatar? What is a seller profile? My most consistent, people who can't juggle two mortgage payments. They have to move for work. They maybe this was their old primary residence that the kids were living in, the kids stopped paying, or the rental, it's a rental property they can't keep paying to. That one, so juggling two mortgage payments is a pretty consistent one that I've gotten. Pre-foreclosure is another, but keep in mind, you got to figure out how much are they behind. You need to get that thing current. It needs to be a good loan, not you take it over and it's still in foreclosure, right? Because then you go down the ship too, buddy. Generally, financial issues. What am I getting to do right now along with these? People whose insurance went extremely high, they don't have the ability, the extra reserves to be able to handle it. I'm selling some of my properties right now to keep that I didn't want to keep, and I'm keeping that as extra reserves, so I can weather this insurance storm. So then being able to find. Lastly, let's talk about some do's and don'ts. So here's some do's. Set the expectations properly with the seller. Again, I'm not telling, I'm going to pay you off in 6 months. I don't know what's going to happen in 6 months, right? I'm not making promises I can't keep. So I'm going to set the expectations. I'm going to disclose everything, right? I'm not saying, oh, don't talk about this new on sale clause. I don't want them, don't talk about this. I've actually had attorneys being like, hey, you know, have you told them about this? Because like, one of the things attorneys told me is, like with wholesale deals, with creative deals, some investors can be very like sleight of hand, like, oh, don't look over here, I don't want to disclose. I want to lead so authentically. I'm like, my reputation, I care about it more than I care about the money I could potentially make on the deal. And I've made 6-figure on deals, so I don't want to, like that, like at the end of the day, that matters. So I'm going to disclose. If you're the type that wants to hide it, you're not going to be in business long. That's also not leading with integrity. Let the problem dictate the tool. Don't go in saying, I have to buy this subject to just because I want to try it. If the seller doesn't need, not every seller needs to use this option. Respect the necessary paperwork. Failure to do so has what got my phone ringing from people like, well, I learned about subject to online, but YouTube University didn't tell me I needed a limited power of attorney. And also, don't pit the paperwork on someone else to the point that you're like, oh, well, I thought they did that. It's on you. It's on you, buddy. Have reserves. Learn from my mistake. You might get into this deal for little to no money down. The primary residence I bought, it cost me $1,800 to move in and take over making the payments. A lot of us can do that, right? But here's the thing. Ownership requires 2 types of reserves I have. One for vacancies, because I care about keeping my underlying promises. But the second one is for repairs. They're going to come up. It's inevitable. The next one is you want to make sure you have options. This comes in the form of equity. Again, your exit strategy. If you're buying it where it's, you know, upside down, doesn't have equity, or it has like, you know, $1,000 in equity, like, oh, it has equity. I'm like, that might go away tomorrow. So make sure you have options for equity and funding for different things. And then remember that it's still institutional debt. One of the big things is, at the end of the day, don't get me wrong, banks are great, but at the same time, banks can make mistakes. I've heard some horror stories with institutional debt, where, you know, they sold the loan to someone else, and the loan lost the paperwork and started foreclosing on their subject to deal, and they get notices about a foreclosure. Real deals that have happened. At the end of the day, institutional debt is good, but it's also not your debt. It's just debt that you bought subject to. So in a way, it's good debt, but it's also not the safest form of debt. So keep that in mind. You need options. Here's some things to not do, and we're ending up here. We're going to do some Q&A if you need it. Don't underestimate your promises. Again, you need to make sure you're keeping those. I'm not a fan, this is actually very controversial, I'm not a fan of wholesaling. A lot of people teach wholesaling subject to deals. I'm not a fan of it because it is a transaction between 2 people, and it is intimate, right? It's a longer lasting relationship. It involves people's credit. Ask me how I know, because I know people who are now entangled where they wholesaled to someone else and that person's not making the payments. And it caused that owner to go into foreclosure. Do you think they're not going to involve that wholesaler in the if they're going to be a lawsuit or something as well? They have the right to. So don't get me wrong. I might buy it subject to and then maybe lease option it to someone, to an investor. I'm going to stay in as a principal. I'm not going to wholesale where I give away my rights. I'm going to stay within my rights. I'm going to structure the deal properly. But then don't make promises you can't keep. Again, investing, especially when it comes to ownership, requires capital. So again, this is where, look, you may say, Courtney, I want to do these deals that are low to no money down, but maybe if you don't have the additional money to continue to make your promises, or to handle when repairs need to be made, or something like that, partner. Bring someone in, right? Ultimately, guys, this is a very powerful tool. I am stacking my reserves because I plan to utilize this one. I will tell you, I don't want 100% of my portfolio subject to them. I just don't. So with that being said, any questions? Yes.
Okay, so you said that you would get a limited power of attorney, for
Yes.
the instance of an insurance payoff. What would be another example that you would read that for?
If I have to, maybe if I go and fight the taxes, the property taxes, maybe the property taxes are too high and I want to go fight them.
Okay.
They're like, who are you? Why, who are you tied to this property? So maybe another one might be HOA. There's maybe some issues with HOA. So you asked a question. I give away books at every single one. Which one would you like? You've got the 7 Spiritual Laws of Success, the 17 Essential Qualities of a Team Player, and getting to yes.
Did I lay that too cold?
Yeah.
Oh my God. Everybody's shivering. I'm not gonna say
A little too cold, huh, Brett?
Sorry.
Yes, ma'am.
I'm trying to knock it down.
So, I know everyone's freezing. Thank you. I know.
Let's sit up.
So the question here is, when you transfer title, how do you establish your basis, meaning tax-wise? Bob?
Which would you all agree to purchase it? So if you're buying it subject to, there's no money down, it's the value of the note. You're
Right.
So, for example, I bought mine subject to $149,000, so that would be my basis.
Yeah.
Okay.
Why does that matter? When you go to sell. That's me how I know. Selling with a very low basis right now, and I've really tried to trade it. I really tried to trade it. But then there's some other options in. Here you go.
Depreciation recapture.
Yeah, that's what I was saying.
Here's the thing is, that is ultimately going to become, you want to make sure you have a real estate specific CPA that can handle those questions. Obviously, we love Bob for that reason, because the other one was like, what did you do? What did you do with that property?
What?
Right? Yeah. So those things matter. So depreciation or capture, that's going to depend on your exit. What are you going to do? Also, guys, not all exits, meaning short-term, long-term, lease options, all these types of different exits that you can do with it. Look, you can buy it subject to and flip it. You can buy it subject to and keep it as a rental, a short-term rental, long-term rental. You can buy it, but keep in mind, it's good debt, but not always the safest debt. Any other questions? Amy?
Can you mix strategies? For instance, they only owe 50,000, but
I
you
love
owe
that.
100,000.
Yes, you can.
Okay.
What's the
You can
question?
structure stack.
What's the question?
Can you make strategies? So remember, this is one, subject to is just one tool and tool belt. But maybe they only owe 50,000 on the loan, but they want 100 grand for it. Great, I will keep that one in first position, but maybe I'll give you a second mortgage, a seller second for that other 50,000. The question is, not only, here's one of the things, I like to hide the mad scientist behind the curtain. I don't want to show it to the seller. Because one of my big skill sets I love is structuring deals, right? Creatively and all that. I'm not going to be like, oh, I can do this, right? Like, these start going, right? So I'm not trying to do that. But I'm saying, hey, well, what are we trying to accomplish here? And if there's a willing buyer and a willing seller, we can figure deals out.
Yeah.
Does that make sense?
Yes.
So at the end of the day, the deal needs to be able to handle it though too. So that has to be kept in mind. Because for example, they want this, but it makes the payment $2,000 a month and it can only rent for $1,500. Like again, you need to make sure. Ira, you have one?
Yeah, what's the difference between an installment sale and a seller financing credit sale? Is there a subtle distinction or is it just another name for it?
Say those words.
So, no, he's asking the difference between an installment sale and a seller finance, so a credit sale. Publication 537 or 437. It's either 537. So the IRS has at 537, publication 537. The IRS has like these pamphlets. You can go online. Mr. Leon Flyfisher, one of my mentors on creative financing, get around creative finance people, right? Because then you can say like, well, why is this even a question? It's a good question. He literally will print these pamphlets out from the IRS and read them. I'm like, sounds like great reading material. And here's the other thing is you get in front of a sophisticated seller and you can actually use that as a tool as well. I think it's publication 537 from the IRS, and it talks about what is a installment sale. So a big difference between there, one of the biggest things that comes to my mind is title transfer. So for example, the most common form of an installment sale in Louisiana is a bond for deed, right? Title doesn't transfer to that. Title usually transfers whenever, an agreed upon date. Maybe it is when, you make all the payments, or maybe it's after your 10 years of payments, or whatever you agree to. So title stays with the seller. Why is that important? Because what if you have $100,000 in equity? You can't go get a loan on that property now, though, right? The second, though, one is basically a seller held back mortgage. At that point, the seller's just now the bank loan number one, right? You can then go get a second mortgage or something like that. It just depends on the terms of the agreement. Title is usually a big one.
Doesn't the house has to be free and clear in order to be a seller finance? That's my understanding is, you cannot do seller finance unless the house is free and clear. That's true. When you're buying.
In essence, you can then buy it subject to, and then give them a seller second, or a wrap.
Right, yeah.
So you can do a wrap for the difference.
Right,
Yeah,
you have
but
to
you
do a
can-
second.
Does that help, Irene? Does that
Yeah.
answer your question?
Yeah, for sure, thank you.
So the IRS treats the bond for deed and the contract for deed as an installment sale. So,
Which is also where that 537, you want to look at that. But a credit sale, again, that credit sale, they're getting payments made like it's like a loan. So,
I think in a credit sale, also, if the buyer defaults, then the seller has to,
foreclose, they have to foreclose, and a lot of times,
in a
that's-
judicial sale.
well, so that's also one of those things where foreclosure costs about $5,000 to go through that, right? But here's the thing is, in a bond for deed, if your paperwork's not correct, it also says you have to foreclose. But if you have proper paperwork with a bond for deed, they can just do an eviction. It just depends on how the bond for deed is worded, though. But that's a good point as well. Any other questions? Did that confuse some of you guys? Was that like? Here's the thing: if you guys are new to creative financing, get around creative real estate investors. You need to immerse yourself because there's a lot of tools in those tool belts, baby. I promise you. There's still some that hurt my head. I'm like, good Lord. But the reality here is, at the end of the day, get around creative real estate investor. It just, when I said earlier that I wanted to trade my, for example, I might come across a seller who wants those baseball cards, those football cards, the 40,000 as a, say for example, a down payment on a creative deal. When I got introduced to stuff like that, it started blowing my mind. I'm like, oh, for example, I got a boat from a house in Lacombe, and I stupidly sold it for cash. I could have, that jump boat, a seller might have wanted it, right? I could have traded it for something. So I could have sold, look, there's a lot of things, but when I started getting around creative people, I started being like, oh my goodness. Because at the end of the day, when you think that cash is your main thing, or things like that, you start getting limited. Any other questions? We're going to start to wrap up here. So look, guys, let this be your introduction. Go to Courtney10k.com. The top right link is our YouTube channel. There's 2 more trainings on subject to. Go listen to 2 other practitioners. Every one of us are going to do it a little bit different, right? The last thing, guys, so we have the meetings over here, but on September 13th next month, we're going to actually talk about building wealth through notes, through paper. So that's going to be next month here in Covington. But tonight, we're going to leave from here. Bob, can you head first? Actually, I will say, who's going to come to the meeting after the meeting? Here for you guys. So, do you actually mind?
Sure.
So Cole, can you stand up? Cole's going to head down to Chimes and grab us a table. Tell him it'll be like a tin top that'll grow. But this is who you go look for, okay, guys? Chimes is right down the street. We're going to go ahead there from here. If you're just going to sit here and chat, go do it. It's a lot more fun over there. They have food and drinks, I promise. But thank you guys so much for coming. Look, we've got some information out there. If you had a great time, guys, take a picture, snap a picture, share about it, share about your takeaway, and we're thankful for you guys. See you guys in the next 2 days.